Hi, I'm Steve LaFrance, and welcome to this month's market update. As you surely know, markets experienced a sharp sell-off, with the S&P tumbling more than 10% after new tariff announcements on April 2nd. However, as trade tensions eased, the markets rebounded, cutting losses to under 1% by month end. Interest rates fluctuated but ultimately remained unchanged, while gold surged to record highs. Meanwhile, the US dollar weakened due to concerns over policy direction. A major shift in market leadership also emerged. The Mag 7 struggled, down 15% year-to-date after an explosive 60% rally last year. In contrast, defensive sectors like utilities, staples, healthcare, and real estate have seen steady gains, even as the broader S&P 500 remains down 5.1%. Tech was essentially the only sector to finish positive, with all other sectors either falling flat or moderately negative. Meanwhile, energy dropped nearly 14% as oil prices fell sharply. Despite some volatility, bonds remained steady, with the U.S. aggregate gaining 0.4%. Investment-grade corporates dipped slightly, while high-yield corporates managed to stay just above the break-even point. International stocks fared better than the U.S., rising 3.7%, and emerging markets edging up 0.1%. With Washington introducing sweeping tariffs, businesses and consumers have grown more cautious. While tariffs have accelerated short-term demand, uncertainty around future growth and investment remains. The Fed has put its rate-cutting cycle on pause as it weighs inflation concerns against potential slowing economic growth. Although they are meeting this week as I record this, essentially no one thinks a rate cut is likely. Yet 4 rate cuts are being priced in for 2025, with the first expected in June. Last week's GDP report showed Q1 decreased 0.3%, which was likely caused by the surge in imports ahead of the expected tariffs. With consumer spending up and a better than expected increase of 177,000 jobs in April, the economy remains resilient, as corporate earnings remain strong and easing trade tensions give markets a sense of relief. And that's all for now. Thanks for watching, and stay tuned for more insights, and let's navigate these market shifts together.